Hi, this is Kim, the CEO for Standish Compliance. It's regulatory filing season, and if you're an SEC registered investment advisor or an exempt reporting advisor, chances are you're preparing to submit your annual amendment, which is due by March 31st. Here are two important reminders based on our many years of experience doing Form ADVs. First, be sure you calculate RAUM consistent with the instructions in Form ADV and also with your business practices. Regulatory assets under management, or RAUM, is calculated based on your securities portfolios, which include those that have more than 50% of their assets invested in securities. It's also calculated based on the current market value and not the cost of investments. RAUM is calculated on a gross basis without deducting debt or any outstanding liabilities. For private funds, RAUM includes the total assets from the fund's balance sheet plus uncalled capital commitments. Keep in mind that a 3C, 5C fund under the Investment Company Act is assumed to invest more than 50% of its assets in direct real estate investments. So those funds would not be deemed securities portfolios for purposes of RAUM. Second, it's important to review your exemption status and its applicability before submitting your Form ADV. Exempt reporting advisors, or what's known as ERAs, are required to file a short Form ADV. If you've claimed the private fund advisor exemption, but your assets were more than 150 at 12/31, you'll file your short Form ADV by March 31st. After that, you'll have to fully register with the SEC within 90 days or by June 30th. If you rely on the venture capital exemption, you can continue to file as an ERA indefinitely, regardless of your AUM. Keep in mind that if a venture capital fund no longer meets the definition of venture capital, the advisor will immediately lose its exemption and will need to be fully registered as an advisor before the transaction that causes the fund not to qualify. Such transactions typically include secondary transactions or using significant debt in conjunction with the transaction. One final note, both the private fund advisor exemption and the venture capital exemption are contingent upon the advisor only managing private fund assets. Therefore, if an ERA is contemplating a separately managed account, it would need to be fully registered before accepting the SMA. Keep in mind that it takes 30 to 45 days for your registration to be effective. So as soon as you're contemplating a transaction that would cause the fund not to qualify, you'll need to immediately begin preparing your Form ADV. This guidance focuses on existing fund managers, but if you're a new fund manager or launching a new fund, you'll have a variety of regulatory filings that are required, including filing a Form ADV to claim your ERA exemption within 60 days. But that's a topic for another day. Well, that's a wrap for our Form ADV reminders. Next up on our regulatory calendar is Form PF, so tune in soon for our Form PF reminders and tips.